Hello, trading is closed on January 9th, 2019. Yesterday we said the open was going to be telling. We said if this high held, we had lower targets and we should drop in a straight line. We said if we gapped and promptly took out this high, the pattern was killed. Well, we gapped up and took out that high. So before the open, we knew this wasn't going to happen. These numbers will keep on our list. And as we've said, from this breakout here, it's unsustainable to break out from a point down like this. And at some point, this whole thing has to retrace, which means these will print. And the question is how soon. Today's pattern was the one with the early high. It's negative when you don't close at today's high. Lower prices should print, but let's not forget, tomorrow's open is a surrogate for today's close. So if we gap and promptly take out this high, then the negativity is erased. It's also negative to gap up at a series of new highs and can't close over any of them. It's also negative, but once again, tomorrow's open's a surrogate for today's close. If we gap up, or at least promptly take out this high, all that negativity is erased. This high holds, and I'm going to show you why I think it will, then it's a negative pattern and lower prices should print. Doesn't mean we have to close lower, but there's a good chance this is the end of the up move. During the day, we said ultimately higher prices should print. There was a big drop, but they did print. Here it said ultimately higher price it would print. Said the up move was false, the drop was false. Here's the minimum. We got more than the minimum. Says that was false. Says this drop was false. All the retracements have happened. Now tomorrow's pattern is the one with the early high. Doesn't mean you won't gap down first. Here's the long-term count. Here's your A, here's your B. Somewhere in here you're going to have a wave C. Now it would be nice if C, we had a fib relationship to A. And at this point, I don't see that. But there are enough fib relationships at this high to make it a very likely candidate for the end of this move. If you look at this wave C itself, here's your A, B, C with good fib ratios. Inside red C, here's your AB with A equal to C. You draw the whole fib grid. Here's your 61.8. Here's your 50. Here's your 38.2. This is the 88.66. So you all have a nice appearance to it. But the real significant thing is here, this isn't quite 3 drives to the top, but it's 3 moves to the top. And if you take the middle move and you set it at 61.8%, the top is right at today's high. So it is a Fibonacci target of the middle move up. All the fibs work in here. We have a negative pattern. All we have to do is to avoid taking this high out early. And this is a very likely candidate for the end of the ABC up. And the stop, of course, is over today's high. And that's over a high by a significant amount. Goes over by 1 cent, I don't care. But that's the general idea. This is a negative pattern invalidated if we take this high out early. If we don't take this high out at all tomorrow, it's a good chance the up move we had for the last few days or few weeks, I should say, will be over. That's today's call.